Morning, everybody. It is 8:10 a.m., May 20th. Welcome to my channel. Market yesterday, wow, that was, I guess, a buy to dip opportunity. And I talked about the confluences I saw on the ES 1 hour charts yesterday. All right. I talked about that, and that was very pivotal with that trend line, that trend channel line, the most traded price of the month and the week, and the anchored VWAP from the US China trade deal. That right there was the where the market got bought up and just ripped up and took all the selling out, made new highs, and closed higher on the day. So that was just erased that Moody's downgrade. All right, so just like erased it. That was the seller's one shot to do anything, and they didn't really get anywhere at all. Right. We'll get into that hourly chart because now there's a significant level in the Nasdaq I want to talk about. All right. And today there's more Fed speak. All right. Remember, this week's a little lighter. And then we go into Memorial Day weekend. All right. So without further ado, why don't we get into it? Welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All help me find structure in the markets along with anchor view ops and my trusty market internals. Okay. I had a decent trade yesterday. I mismanaged that trade. I mismanaged it. Uh, I don't know if you call it greedy, but I should have took some profits instead of waiting for that breakout to happen. I went long the Qs, and you can see there was about three 15-minute candles where they were pushing up over last week's highs, and I was expecting to get a push higher based on internals because they were so strong, but it just couldn't get over that hump. And I was waiting with a very soft stop loss. I took some profits at the close, Friday's close, which is fine. I should have took another about another 50% off my position, then just held. But I didn't do that. So there's always ways to get better, right? I'm trading really good lately, so I'm not going to complain about that. It's just execution, right? It's all that it comes down to is execution. All right. Now, hopefully, you guys join me every day. All right. Give you the market story, the news, the leaders and the laggards, right? Economic calendar. I'm adding the earnings calendar back today. There's a couple of decent ones to look at there. We go over daily charts, the triple-headed monster. That's your bond market, your dollar, your VIX. And then we go over the market profile, volume profile, ES and NASDAQ analysis. And then I give you long and short trade scenarios. Okay, now I also do the bonus 1 hour charts, which I believe is very beneficial for anybody watching because it's just very key levels. You pull back a little bit and just see what the market is doing, right, on an hourly chart. All right, it's not too granular, it's not too pulled back, but it gives me a good gauge, a lot of where we are in the markets. Okay. All right, why don't we get right into the futures? Watch, let's see what's moving markets. All right, so we have the silver metal, silver. It's up 0.52, gold up 0.19. The market's kind of muted today. 30-year bonds up 0.08, Dow up 0.03, Russell's flat, VIX is flat, dollar's pretty much flat. 10-year yields only down 0.13, ES down 0.18, crude down 0.24, Nasdaq down 0.29, Ethereum down 0.49, and Bitcoin is the laggard today, down 0.55. So nothing is really moved that much. Okay, moving on to the Max 7 Plus here, and let's just look at this list here and see what's moving markets. So Coinbase is up 1.88%. That's interesting. While Bitcoin is not. Tesla's up 1.18. Eli Lilly up 0.37. Google's up 0.31. AMD up 0.14. Okay, laggards here, we got Netflix down 0.27, Amazon down 0.27, Apple down 0.29, Nvidia down 0.40, and Broadcom down 0.56. United Healthcare has definitely rebounded It's up 2.49%. You can see that right here. Let's just show it to you real quick. So United Healthcare is up 2.49%. And then Home Depot reported earnings. They're up 2.29. So United Healthcare definitely bouncing off the bottom here. It went all the way down into like 248. All right, already back up to 323. That is a big moving stock. It's very volatile. Okay, moving on to sectors. All right, who's leading the pack today? That is healthcare. That's United Healthcare, up 0.22. Followed by discretionary. That's your Tesla, your Amazon, your Home Depot, up 0.07. Okay, now lagging is financials, down 0.15. Technology, down 0.28. That's your Apple and your Nvidia and Microsoft. Semis is down 0.39. So semis, it's always your indicator for risk on, risk off. All right now, risk off. All right. Moving on to the economic calendar. Today it's Fed speak. So at 9 a.m. Fed Barkin, Fed Bostic. 9:30, beautiful. Non-market open, Fed Collins. Fed Musalem at 1 p.m. Then you got API crude. Then more Fed speak, but that's after the market closes. All right, that's the calendar. Let's look at the earnings calendar. Let's just see what reported. All right, so after the close yesterday, really not much to talk about. Before the open today, Home Depot, Billy. After the close today, Palo Alto, Toll Brothers. All right, tomorrow before the open, Baidu, Target. I'm not sure if that's TJ Maxx, TJX. I don't think it's TJ Maxx, but I could be wrong. Wix, Medtronic, Canada Goose, Xpeng. Okay. All right, moving back to here, get some news here. All right, so you see Home Depot beats sales estimates on stable demand, maintains forecast. All right, it says exclusive Intel Explore Cell Networking and Edge Unit. What else here? Pfizer in deal with China's 3S Bio to license cancer drug candidate. Weight loss company Noom pivots to smaller doses of compounded Wegovy. All right, let's see if there's anything else here to talk about. It looks like Nike, the sportswear retailer, is laying off some of its employees in its technology division. The company representative told Reuters Monday. All right. Looks like Raytheon, the company and the union representing around 3,000 striking U.S. Pratt and Whitney workers, are resuming talks on Thursday as the stoppage continues in the third week. Spokespeople for both the company and the union said on Monday. All right. Bath and Body Works. Let's say Barclays raises target price to 35 from 41. All right. Target. Barclays cuts target price to 102 from 140. Uber. JP Morgan raises target price to 105 from 92. Williams Sonoma. Barclay raises target price to 166 from 131. All righty. Let's see what the juice has for us. Now, the juice has a couple things here. Um, Japan mulls accepting U.S. tariff reduction, not exemption. Then it says Iran Supreme Leader Khamenei. Oh, geez, I can't say this. Khamenei. I don't think that nuclear talks with the U.S. will be successful. Okay. Um. Let's look at this. This is important. Trump speaks at House GOP conference, so you have to put that down. Trump speaks at 11:55. So we have Trump at 9 a.m. Trump at 11:55. So I'm gonna have to put this alarm here because you can't miss if Trump speaks because it really moves markets when he says stuff. So really have to be cognizant of that. Give me one sec here. Just want to make sure we're all good. Alrighty. Let's see here. I think we just went over everything I wanted to. Oh, I wanted to go over some breadth charts here. Breadth charts here. Let's do it. All right. So, bullish percent index. This was the buy right here. Woof. Around April 7th, April 8th. Man, that just means bullish percent index that only like 10% of stocks were on buy signals. All right, that was probably your contrarian indicator here in the bullish percent index. All right, so if we go to the Nasdaq 100, you can see we're pretty frothy. Okay, 84% of stocks are at buy signals. Okay, and to give you another thing, the sentiment has definitely shifted. Here's the sentiment survey. The bulls, they were at 18, 19 down here. That's very historic lows, right? They are now all the way up to 35. So 35% of the investors now are bullish. Let's see how many. The bearishes were pretty high previously, up to 60s. 60% of them were down now to 44. Okay, we're down now to 44. All right, and if we look at my other breadth indicator here, the percentage of stocks above the 20-day moving average in the S&P 500, we're at 86%. Frothy number here is around the 90s. You usually get some type of pullback. Okay, this is a very frothy number. We were all the way down here to like 1% in April, that around that April 8th, 9th area. That is also an indicator that, we're very extended to the downside. Okay, so this doesn't mean I short. It just means like be wary. This is frothy. All right. Remember, the market can stay irrational longer than you can stay solvent. That is definitely true. Because whenever you feel like, oh, this market's not going to go up anymore, it does. It does, right in your face. Right in your face. All right. So those are your breadth charts. All right. Let's move on. We're going to move on and talk about the daily charts here. Let's pull those up. And we'll just look at this channel that we've been in, right? Looking at the SPY here, just crazy, just a crazy market, right? What happened? Here's that trend channel, right? In the middle of it right now. Every time we've hit it, it's been resistant, right? Then we move sideways, pushed up, right? And then you're like, oh my God, Moody's, right? Well, we opened below the lows and we just ripped up and closed higher than Friday, which is ridiculous, right? Right at last week's highs. Right at last week's highs is kind of where you found resistance. Where are we at now? We're actually below yesterday's close. We're at 593. Let's call it 594. 594. So we're up towards the highs of yesterday. We're not at the lows. We're not at the midpoint. We're close to the highs. Okay. So let's look at futures. Just get a better look at the price action here. You can see we moved up here and we're just hanging out last week's highs. All right, we're hanging out. Now, moving on. Qs. Here's that trend channel. All right. Resistance, resistance, resistance. Keeps being resistant. Same thing. Even lower and ripped up, right? Ripped up, and resistance was last week's highs. So now we have big time resistance here around that 522 level. Okay, 522. Where are we at now? 520, 50, or kind of the upper third of the session, right? Upper third. All right, let's look at futures. Here's that channel, right? And look at the sideways action in the Qs. Woo! That resistance of 215.30, let's call it. That's a big time resistance. 215.30. That is a big time resistance now. That is like 1, 2, 3, 4 times now at last week's highs. And it's big significant level I'll talk about in the hourly chart, the Nasdaq, that you have to pay attention to. Right? Moving on to your bond market. Okay? Moving on to this crazy bond market. Triple-headed monster here coming at you. Let's look at that 10-year yield. Like I said, we broke this downtrend. Anchored VWAP, of course. We're right at the anchored VWAP of 2025. Right here. right? Can't this is a pretty much a big spike here, and that got ripped, right? So people bought bonds right here. Whoop. But this is just in the middle of the model. It's really could go either way. Okay. Let's look at that dollar. The dollar, you can see it's just compressing here, right? There's that uptrend holding a 20-day moving average. It's compressing. It's going to break out to the top, or break lower. Okay. Just keep an eye on that. Go to your VIX. That's 30 days out. The VIX is always 30 days out. Okay. So your VIX, right? You had a little spike here. Now we're down back to 18. Okay, you can see this volatility here. Let's just make it so we can see it a little better here. Okay. This is what we've been doing lately. Right? In this like range, pushed up here. Tried to go above 20 again, couldn't. Now we're back into this range. So that's the range we're in now. And we'll leave it there. Okay. Let's move on to the hourly charts, right? This has really been, I think, a nice addition if you follow me. I think it's just a good way to just look at the markets and see what we're doing here, right? Give me one sec. I just want to update this. Alrighty. We're looking good. So let's just go to the hourly charts here. Okay. Let me get my trusty marker out. All right, so yesterday, this marker's going to be a pain in the butt, isn't it? Give me one second here. Let me just restart this pen. Being a pain in the butt. It takes 2 seconds here. All right. All right. So price is here right now. 59.70, right? That's the futures price right there. Okay. This orange bar right there is last week's highs. So we're still underneath last week's highs. We tried to take it out, couldn't. Okay. We have supply zone now here. Here's our trend channel. Top of the trend, you can see, has been resistant. This has held multiple times, touches. So that's where we're living right now. Okay. Now, yesterday I talked about this confluence here. I said when price was down here, I said you had the anchor VWAP right there from the U.S. China trade deal. That has been support, 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 and support. Right? That keeps the buyers in control from that event. Buyers are in control from that event. You also had this trend channel line. You also had the most traded price, the VPOC of the month and the week here. This was just so much confluence, and we just ripped, boom. And now we're pulling back a little bit and consolidating. Right at yesterday's most traded price. Okay. Now, what's in the way here? You can see here there's a high volume node here above us with supply zones. That level, let's just call it from 6012 to about 6030. This is going to be, obviously there's past price action here. Let's see if we go to it. It should line right up. Would be from, let's see, it should line right up with candles. Let's just go to it. It's obviously from the past. You can see how far back we're going. There it is. So that's the consolidation that we have to deal with here. Okay. So that's looking at ES. All right. That's ES. We're going to move over to the NASDAQ. The NASDAQ just, and they're not structurally the same right now at all. So let's look at the NASDAQ. Now, NASDAQ has a very important level now to talk about. Okay. Let's push this down. All right. Now, just to give you guys a little brief on how I look at my charts, this green line is this year's profile. Okay. This year. Okay. The white is from a rolling year. Okay, the green is from this year. So what just happened and popped off the charts here? Okay, is this. Now we notice. What do we notice here? Here's your U.S. China trade deal anchored VWAP, support, support, and look, couldn't really hold below it, and it pushed up, right? You got your trend channel here, support, support, hasn't touched it again, right? But you've had this trend channel resistance hold. But guess what? We've been hanging up here so much, it has now become the most traded price of this year. Let's call it 215. It's 214.97 to be exact. You can see the number right here. But this is the most traded price now of this year. Okay. And what that means is this is a do or die moment for the bulls, because they need to accept value over this level 215 to move higher. If they cannot, and so far they have not, we're going to take a little pullback, possibly to here, to try to make a leg higher, or you break that swing low here and you go out, take out these single prints and start to move back down to the most traded price of the rolling year, which is 206.84. That's how markets work. They go from high volume node to high volume node. Okay, so this is very, very crucial. And I just showed you guys earlier that the NASDAQ 100 bullish percent index is at an 84. 84% of stocks are on buy signals. It's very frothy. Where now we have a level that we can talk about and go, wow, if the NASDAQ can get over 215, if it can't, you're going to get a pullback. Okay? Because it's frothy. You can see just in here, and remember what I said also, this is very important, that tech, even though yesterday, yes, they had a good day, tech's been, the past couple sessions, money's rotated into healthcare a little bit. I don't know if that's temporary or not, but definitely that's what's going on. All right, so just giving you the full story. All right, that's what I try to do. Hopefully you appreciate it. All right, now we're going to move on. Just remember, those levels are very key. And this is what I say in the beginning, right? I've used market profile and volume profile to find structure in the market. Well, here's my structure. So if I didn't have this on my chart, yes, would I would see this consolidation, but sometimes you don't see it. Okay? But here it is. It's a wall. And now I have to base my trades on this and go, okay, well, if we're around this area and we cannot find acceptance above it and we start to go below it, yeah, I'm probably going to look at shorts. All right? Find acceptance above it, I'm probably going to look at longs. If I'm in the middle of it, I'm probably going to sit back and let the market tell me who's going to win. So that's how you look at it. Okay, that's how you look at it. All right, moving on. Moving on. Okay. So that's just a big, big level in the NASDAQ. I can't stress that enough. Okay. All right, let's move my workspace. We're going to go and talk about market profile, volume profile now. And we'll see that level on my chart. All right. Right to the market profile, volume profile. Here we go. Let's get into the analysis, okay? So remember what I said. I use market profile and volume profile to find structure in the markets. Most traded price of the month and the week. 59.10. Let's call it 59.08. The exact to the tick is 59.08. You round it off to 59.10. Okay? Remember I said market's got to go. Stay above that to stay bullish. And we are. Price is right here. And where's price? Remember what I said. These prices are magnets. Look, this is the most traded price of yesterday. Guess where price is? Right at home. Right there. Okay? right there. Now, profile, we got a distribution, another distribution, and go to, so double distribution here. Okay. Most traded price for the 24-hour has moved here. So remember, the job of the market is if it can move it up here, you can possibly go higher. If it can't, it returns back to value. All right. That's what happened here. Now, if we recap yesterday, it's price action. It's right here. Okay. And that was just straight up open drive. It opened and had no shorts. And where? Added the most traded price of the month and the week, and you drove higher. Then you consolidated for a while. Consolidated. And then Trump had a call with Putin, and some of it was pretty much positive, and the market moved up and broke last week's highs. Okay? Broke last week's highs. Now you broke yesterday's highs in the overnight, but now we're back here. Okay? All right. So let's look at levels. All right. And I got one staring right in my face. Right in my face. All right. So we're going to look at this as a poor low in this market profile terminology. Now remember, market profile is only 30-minute bars that are put together. Watch when I do this. That's all it is. 30-minute bars. It's all the market profile is. Each TPO, which stands for time price opportunity, all right, is 30 minutes. So it's just 30-minute bars. That's all it is. And when I collapse it, it just makes a market profile. That's all it is. And if I really extended it, it would be A, B period, C period. That's all they call it in market profile. Okay. So I'm going to leave that like that. And we're going to look at some levels, all right, and see why. Now, poor low is a double bottom, basically, in 30-minute TPOs in market profile. Right there, you can see that's a poor low. What does that mean? That means that usually every auction ends in excess. Here's excess. Here's some excess. Here's excess. Usually markets leave in excess. All right. Whenever they're poor, just means that it's poor, means that it's not good excess. It leaves a little double bottom here. So what does that really mean? It means that shorts had bad location here, and then the market ripped back up. Okay. So you generally what happens is you generally correct that, just put excess, right? So the key level here is this overnight low, poor low. Look where it's at as well. The week to date VWAP, anchor VWAP is right there. This is a beautiful confluence here. You also have yesterday's value area low, 59.54, value area. That's 70% of the trade of yesterday. Okay, so I'm going to mark a zone here, and you have a 12-hour demand zone starting right here. So this area is going to be an opportunity for a pullback. Long. Okay, so I think this could get broken right in front of us, right here. And it's what happens is it's going to take these, correct this, so the profile could look like this, right? And then that auction could be over or complete. Okay, so I didn't want to do that. So let's put that zone again. Encompass this most traded price of the 24 hours as well, and this demand. That is a zone that I'm interested in. Okay, now we do have single prints here, so let me mark those off because I didn't do that yesterday. So let me I could take anything and just make it right here. So single prints from yesterday are from here to down to the lows. Okay, and all that means is it's emotional buying in this case, and that's usually poor structure. Okay, you can see the thin volume down here. Okay, so remember, all the way down to this level, remember, bulls are in control above 59.08, but you have a big demand zone here. So anywhere in here, preferably in this zone, I like to be long. Now, if we get down into here, yes, could there be a long? But you'd have to come all the way down. That means the market would have to be weak. Okay. Now, above us, we have a supply zone. We have last week's highs right here. All right. So this is what we're working with here. All right, let's get right into the scenarios here. Okay, let's start with the bull. Remember the poor low. So what I would like to see, push down, break that overnight low, that poor low, come right into this 12-hour demand zone. And now remember, single prints, single prints. Okay, remember this is the bull side. Yes, we talk about Elfie, the elephant, on a toothpick. Okay, this is not good foundation. But if it is, that toothpick should be bought because that's a strong toothpick. Okay, and it should, if you get some lower highs, guess what you do? You can take out all this congestion, rip up, pull back to last week's highs, and try to break out and go up to 6,000 at least. This is what I would be really looking for. All right. That's probably the best case scenario that I'd like to see. All right. Now, the market would need to do this quick for me to be interested. Would need to pull really down here quickly. Don't give it a lot of time for the market to get weak and weak and weak. Like it just rips. Then I could be interested in something like that. But like I said, I prefer a more shallow pullback. Okay. And once we go up into here, you need to, so I will leave it like this. That's probably what I would like to see. Okay. There's a bunch of different scenarios I can get into, but that's kind of what I want. Let's leave it at that. All right. Now, let's go to the bear side. All right. Remember what I said about the NASDAQ. The most traded price of this year now is where it's at. So it's going to get choppy there. So this makes it a little difficult. And you got to be more patient because of that big level. All right. That means everybody has traded that price, that 215 that I think that it is in the NASDAQ. We'll get to it. That's the most traded price of this year. All right. So if we're going to talk about the bear side, now you got supply here. Okay. So if I'm want to be short, right? Push up. Now see you have resistance right here, right? Go into supply. Break last week's highs. Test the overnight highs. Maybe we tap it. Then you get a lower highs. This could definitely propel. And you can go down and try to break that poor low. You break the poor low, you're going to dip into this zone that I looked to buy earlier. Okay, it's a pretty big demand zone. And now we do have a distribution here. You can probably land there. If you take this out, you're going to test the most traded price of this month in the rolling year. I'm sorry, the month and the week. You can see the spike here. Okay, this needs to hold. If it does not hold, this market's going to take a dip. Now, that's just a scenario. I don't know, right? But that's what I kind of like for that. Okay, moving on to the Nasdaq. All right, because the Nasdaq has that big level, and you see it on my charts. That's that green box. This green box here. That's your most traded price, that 215 of this year. Okay, and you can just see the resistance here. Right? You can even make this bigger. Okay. So let's look at the profile. It's pretty balanced here. Right? From here, look at that. You got excess, and then you got the value area, and you got a little bit of excess from the overnight. The most traded price right now is like 214. Okay, remember 215. So this is pretty crazy, right? Most traded price of the week is here. Most traded price of the year is here. So basically, all this area is congestion. Market needs to go like this and find acceptance to go higher, or it's going to break this, hold, and move lower. And what does that mean, right? That means that everybody who's agreeing on this price, if you're short in here, you're going to get pain if we go up. If you're long in here, you're going to get in pain. And it's the most people that could be in pain because they're agreed upon that price. Okay. Now, let's get into some levels here. Okay, so we do have a supply zone. Lines right up with this most traded price, 215. So right here, 215.62 is your overnight highs. 215.45 is yesterday's highs. Okay, that's an area that I'm going to be looking to see what we do. Okay, now you have a weak or confluence low right here. Lines right up the most traded price and yesterday's most traded price and the week to date VWAP right there. So 213, let's call it 214. Okay, this needs to hold. If does this not hold for bulls, it doesn't look good for the bulls. Now we do have a single prints that I'm going to put on here. So let me just copy this so we can make sure we have this on our charts. And I'm going to mark up the single prints from yesterday. Look at that. It lines up with the old single prints. That's pretty crazy. Oh, no, it doesn't. No, it doesn't. Let's hold on a second here. Let's go right to the lows from yesterday because it's all single prints. All the way up. Look at that. Wow. All single prints all the way up to there. Very poor foundation above that level. So that's important, right? We do have demand down here. So what I would do is mark off a box, right? From yesterday's lows, demand in these single prints. Okay. Now, this all depends on market internals. Okay. On my market internals. Now, if we look at the market internals, just to let you guys know, that's my bread and butter right there. This tells me what to do every day. See how yesterday was strong. All I did is go, you know what? I really have to look at longs. Look at all this green. Market's not really going to go down. See, so this is the difference, right? If I just look at candlesticks, right, and I go, oh, we're moving up. Oh my God. There's days where I know when this is weak that no, it's going to be range bound. There's days when I know this is super strong where I know I can buy a pullback like I did yesterday. Okay. Okay. Let's go back to here. All right, let's get into scenarios now. Alrighty. Let's start off with the bull case. All right, let's start off with the bull case. Remember, we got to hold above. We got to hold in this area, 214 to 215, most traded price of the week's 214, most traded price of the year's 215. All right, this is very congested in here. Very congested. All right, Chop City. All right, we're in Chop City right now. So what do I want to see if I'm a bull? Two things. If we push down, hit that week to date view up, and we go right into these single prints from yesterday and we get support, and we hold this level, it's going to be choppy in here, and then we can try to make it out of this resistance level. Okay, now, not going to lie, big levels like those, remember, these levels are sandwiched together. I'm not a fan of that shallow pullback just because you're looking for a world of chop in here. Okay. Now, if news comes out, that's different. Catalysts can knock through stuff. What I would really prefer is a deeper pullback into this demand. Okay. Now, what I'm going to say here is it has to happen quick. I don't want the market to build weakness It has to come in here. See, this to me means that now I have shorts on board that I can hurt if there's a quick burst, right? I know I got demand. I know I got single prints. All right. Remember, single prints, if they hold, is bullish. So that's what I'd like, a quick recovery. Now I could take some profits here. Then see if we can accept value and go higher. Right? Because this area is just, I'm not a fan of it. I want to be away from it. Okay? That's just how it works. Whenever you got those congested areas, it's not, it doesn't have poor structure to rip. To see, this is poor structure. This is not. Okay? Oop. I think I just got rid of one of my zones. I know I did. I said there was this zone. Okay. And we're going to talk about bear side. All right? Because this is real. Right? This is a real. I feel like there's a good shot here. We could get a pullback today. Okay? Just because of this level, the market has told us they cannot accept value or accept price above this level 215. Now, price is here inside yesterday's range. Okay? You're at the most traded price of the overnight, at the most traded price of yesterday and the week. Yes, it's very congested, right? So, what I'd be looking for is a couple things. Okay? Now, first, I'd like to get out of this logjam, just chopping this. Break the week-to-day VWAP right there. Break that confluence low. Start accepting value below this level. Then you could possibly get this drop. And now you do have demand here. Clean up this poor structure, these single prints, and go right down to yesterday's lows. Okay? If the market continually gets weaker, right, we could take out this, try to take out this low. Right? You got to rip down, break this demand. Now there's another weak structure here. And there's my boy, the elephant on the stick here, on the toothpick. There's more. You can see this right here. Very thin volume. On a weak market, we'll rip this right to shreds. 209.50. 209.50. Now remember, we're still in May. We're still in May, and markets usually go down in May and bottom in June. So I don't know. That's seasonality. I'm not saying I follow that to the T, but generally that's how the market works. Okay. Now we could push up here, right? Last week's highs, 215.29. Try to break up here. There's a lot of supply up here. If we fail, here's another shot. That now again, you got all this choppiness. I'm not a fan of this as much, but if you could take out these longs, and then we might just chop in here. Okay, we might just chop in here. So I don't like this. I don't like this the way the market looks here at all. I don't like this choppiness. I don't like to be caught in this. All right, because when you think something looks good, it's like, wait a minute, we're not moving anywhere. And then it's why I talk to you guys is I always go, why? Why are we not moving much? Oh, well, I could tell you why. Most traded price of yesterday, the week, and of the year. That's why. Because when everybody can agree on a price, you got longs, and shorts all together, and it's a battle, right? And I don't want to be in the middle of that battle. It's like it doesn't give you much edge there. Okay. All right. So hopefully you guys enjoyed that. Smash that like button. That would mean a lot to me. All right. Hopefully I'm giving you golden nuggets here. All right. Now, hopefully join me every day. In the morning, I give you the market story, right? The market news, the leaders, the laggards, the economic calendar. I gave you some earnings today. All right. Then we went over daily charts. We went over the triple-headed monster, your bond market, your dollar, and your VIX. And then I'm giving you the golden nugget 1-hour charts, right? With the levels that you need to watch. Remember that level, 215, the most traded price of the year in the NASDAQ. It's very key. Acceptance over that price, bullish. Acceptance below that price, bearish. Very important level. Okay, now that's our plan. All right, hopefully you guys follow it. If you do want to see myself, oh, that's Elfie. Sorry. Go to Confluence Trading. Let's put that up again. All right, you join it. You can see the link on my YouTube homepage. Come check it out. I give my thoughts on the market. I give what I'm going to do. I trade. Like I said, more people join, I'll go live. All right. So if I don't see you guys in there, I'll see you tomorrow. All right. Everybody have a great day.